I'm Parmdeep Vadesha. I'm a trustee at the Sir Thomas White Loan Charity, and in this video I'll be walking you through the business plan and hopefully make it nice and easy for you to submit that to us, and we're very much looking forward to seeing that and processing your loan application. So let's get going. Okay, so the first page is pretty straightforward. Just need some details about you, the amount you're applying for from us, whether you're a current borrower, and if you are, you can give us some more information. Type of business could be fashion, retail, it could be consultancy in the railway sector, it could be all kinds of things. So just the industry and sector required for that. We're very open to any kind of business. So that's that. And then has it been trading? If it has, then you can submit accounts to go with it. No problem if it hasn't. You can just take no. So that's that section sorted. Let's move on to the next. So here we just need your name, date of birth, address, usual kind of stuff, a bit about your property if you've got one, or you owned or rented, and any relevant qualifications. These could be anything from the usual, we've put here GCSEs and that kind of thing, to HNDs, NVQs. We've had people who've got industry relevant qualifications such as a nail technician course, accountants have ACCA and that kind of thing. So all of that kind of thing would go in here if you have anything to report. If not, just put not applicable. Particularly, actually, when you're going through this document, if something you don't have anything to report, just put not applicable, because then at least we know you've considered it and it's not been missed or something like that. Director of any other companies, and also anything in any businesses that have been insolvent in the last 5 years, you can list them there. Okay, so that's that section. In the business information section, it's probably worthwhile for if you haven't started your business yet and you're not sure if it will be a limited company or a sole trader or partnership, or what's the difference between them, or why you'd go for one or the other. This is really where the business support providers come into play. So if you have a look at this document, you'll see a whole bunch of accountants and other people, other organisations you can go to. We strongly recommend talking to them, particularly because it's free, without obligation, and it's the first session is free, because they'll really help you not just understand what you've put in the business plan, but also things you might have missed. And because we're very open to the idea that you're starting a business perhaps for the first time, and you're not an accountant, and so we're not expecting you to know every single thing about accountancy. And so it's useful for you to run your ideas and your figures by somebody who does that for a living. And we actually find that we get a much higher acceptance rate from people who have sought advice. And it doesn't need to be any of these, by the way. It could be an accountant you've used or know of, so that's absolutely fine with us. But just having that somebody else just give it the look over is very, very useful. Okay, so going back to here, if you haven't started your business yet and you're not sure, you can just put haven't decided yet. That's absolutely fine. If you have decided, obviously you can just tick that. You need to be a 50% shareholder or 50% stake in the business. And so in this section, if it's just you have your name and then 100% share there. If you have partners, you'd put you with 51% and then somebody else with 10%, somebody else with, and it needs to add up to 100%, obviously, in total. If you work from home, you can just put your home address there. Otherwise, you could put some other address, and if you have another address, you can talk a bit about in this section what the situation is with the property. And if you don't have one, or you haven't started your business yet, you can just put not applicable, or you can just mention what your plans are in terms of acquiring a premises. It's useful for us to have a website and social media. It's not essential, but it's just useful if you have them, because we can, as trustees, we don't know you or the business, so it's handy just to see a little bit about your background and what it is you've done in the past and are looking to do, if you have that, and if you don't, it's no problem whatsoever. Relevant business experience, you would mention that here. That could be something like, perhaps, let's say you're starting a hairdressing business, you maybe have worked for another hairdresser for 3-4 years and you've learnt the business that way, and now you want to start your own business. That's absolutely fine. It's very normal, that's how it would normally go. And then other relevant experience, you can put it there. If you don't have any, just put not applicable or leave it blank. So essentially in this section, business description, it can just be a couple of sentences telling us a little bit about what the business does. For example, you could be offering a consulting service to the, let's say, to the construction industry. So it could be consultancy for the construction industry, and you could say principal activities would be advising builders on their development projects or something like that. It's pretty straightforward. It doesn't have to be a huge amount of detail. I know it's a very big box, but we're not expecting you to fill the whole of it in. A few sentences is absolutely fine. So in the marketing section, you might talk a bit about a website you've got. You might talk about your social media presence and what that's all about, and other ways in which people find out about you. And then just mention a bit about the products and services and what makes them unique. For example, you may be, again going back to the hairdressing example, you may target a particular niche. Could be children, for example. It could even be, I'll tell you what, I'll give you an example, a pet grooming. We have a borrower who's in the pet grooming business, and I guess what's unique about her business, it could be that she offers particular kinds of grooming services that aren't offered elsewhere. Maybe she's got a particular machine that can do a certain kind of groom. As you can tell, I know nothing about that industry, but you get what I mean. What makes it different? Say, going back to another one, could be food. Let's say you've got a food stall, perhaps you've got a particular twist, and when you go to events, you're the only Lebanese food provider there, and that's what makes you unique. In the competitors section, we're interested in knowing a bit about people you compete with, companies that you compete with, and they might be very big companies. For example, if you're an accountancy firm, you may compete with very large accountancy firms, all the way down to one-man bands. And the reason this section is useful for us is because as trustees, we may not have very much knowledge about your industry, and it's just useful for us to learn a bit about where you kind of sit within the various suppliers that are out there. So again, going back to the accountancy example, if you're starting a small a bookkeeping firm business, then your competitors could be ranging from other people that work from home and offer a bookkeeping service right up to some of the very well-known local accountancy firms. Their pricing policies may be a mixture of things. They may be that they have a flat fee pricing structure, in the sense that it's £200 a month and they get a bunch of services, or it could be more on a sort of hourly basis, and that's how customers are paying for their services. You don't need to identify every single competitor, but give us just an outline would be useful, particularly if you're in an industry like food, for example, where there are many competitors, and so it's going to be difficult for you to list all of them, but just give us a bit of a flavour of the industry. We're not expecting a huge amount of detail here, but it'd be nice to see that you understand who you're up against. Okay, so in this section, it says about your customers, but then it says expected annual turnover. That's your expected annual turnover. So in the next 12 months, or once the loan has been, once you've taken out the loan, after that, over that 12-month period, what do you expect your annual turnover to be? And that just gives us an idea of where you kind of see the business going, really. And then later, when we get to the financials, we can then see a bit more of a breakdown of how that looks. I'll come to that. So how will you achieve that turnover? So whatever turnover you've put there. Don't forget, turnover is just your total amount of sales. It's not profits. It's just the money that comes into the business from your customers. And how will you do that? Well, if you're in say again some kind of consultancy business, you may have yourself and a couple of other people providing consulting, and each consultant would be bringing in say 100,000 of turnover. So in total, your expected annual turnover might be, say, in that case 300,000, and your pricing policy may be that you slightly undercut the big boys because you don't have the same. You all work from home, and you're quite young and energetic, and you can get more productivity out of your small team for a lower cost, and subsequently you can then charge a slightly lower fee than the big firms, and that's your pricing policy. You're undercutting the larger firms to gain that sort of market share that way. If you're running a food stall, say, then you're achieving that turnover perhaps by going, so if we gave you a loan, you'd then be able to acquire a van, and you can go to more events, and then your pricing policy may be to charge a premium. In fact, you may not try and go for the discounted route. You may charge a premium because people really like your burgers made with a very particular vegan compliant meat substitute, and it's high quality, and people are paying a premium for that. So that's kind of what we're looking for there. What type of customers? Well, in the cases I've just given, if you're food, it could be general public. In the case of a consultancy, it may be that you're dealing with other large businesses and you're not dealing with the general public at all. In terms of identifying your target market, you may be open to anybody, or you may have a very specific target market in mind. I'm just trying to think. If you're, say, a hairdresser for ladies, you may be targeting a very particular group in that sector. So, for example, you may be in an area where you have more retired people, for example, and so your target market would be, say, an age group from 50 plus, mainly females, and so that's your kind of target market, which you understand quite well, and that's what you're going after, as an example. In terms of trade, if you're dealing with big companies, they may have, say, 30-day terms in which, so what that means is you get paid 30 days after you've invoiced for the work that you've done. Or if you've got a retail shop, you get paid there and then from people paying cash up front or with their card. The VAT question is important simply because there is a threshold at which you're going to have to register for VAT, and you might think, well, why does that matter? It matters because, say, the threshold is £85,000 of turnover. If your business is turning over £84,000, you don't need to charge VAT to your customers, and so that's not an issue. But the moment you go past 85, you need to register for VAT, and now you need to start charging VAT, which is a 20% additional charge. Now that's fine if you're dealing with other companies that are VAT registered and they can reclaim that VAT, and it's not a problem. But if you're dealing with, say, small businesses, and you're an accountancy firm, and not small businesses, sorry, let's say landlords, individuals, and they can't reclaim that VAT, then the moment you go above that threshold, then instantly there's a 20% increase in your fees, which needs to be essentially, how will you handle it? That's the question we're trying to figure out. So we just want to know there that you've thought about it. If your annual turnover is expected to be in that sort of range, if it's not, then it won't really be an issue. But yeah, this is again where having advice is useful. Okay, so on to the next section, important contacts and people. So if you have a bank manager, most people don't nowadays, if you've got online banking and that sort of thing, so don't worry if you don't have one, and most people won't. Accountant, solicitor, that kind of thing. If you have them, by all means put them there, and if you don't, you can just put not applicable. Talk about the kind of staff numbers you're planning to have at the start, or if you have already started your business, you can put that there. Key training requirements might be, again, if you're offering, say, Nail technician services, there may be some kind of certification that your staff may need. So we've had laser beauty treatment businesses, I can think of one, and she needed some kind of certificate, safety certificate and that kind of thing. So that might go there. If you're in food, you may need some kind of health, food hygiene certificate, so you can put that there. Okay, major suppliers in terms of trade, so these are people supplying your business. And in terms of trade to them, you may be paying them, say, with 30 days credit, or you may have to pay them there and then. So just list them there. If not relevant, you can just put not relevant. This section can be important for some businesses. So for example, if you had a marquee business, the insurance side might be quite important because the marquee could blow away or injure somebody, and you would need to have some kind of policy in place with regards to public liability and that sort of thing. So it is useful for us to know, well, very useful in those sorts of industries for us to know that you've thought through that and you have that thought about. If you haven't sorted it yet, fine, just put I haven't got around to it or looking into it. Again, legal matters, you may have issues there in the sense of we do fund franchises, so you may be buying into a franchise, in which case you may need legal advice on how that's going to work. Partnership, again, you may have a partnership agreement, and that's something that you're working on, so you can mention that there. Contingency could be, say, we mentioned here illness. So what would happen if you're the proprietor of, say, a nail technician business, you have 2 staff, and you become ill, and what would happen then? So have you thought through all the different parts of the business and who would take over and what would that would involve? And obviously if you're the only one there, then you may not have somebody to pass things on to, but then what would happen to the business? How would it operate if you were out of action for a period of time? Self-explanatory here. If you've applied elsewhere or other sources of finance, you can talk about that. Okay, so let's go to financial information. As I mentioned before, this is the part where people tend to find the most tricky. So let's just work through that, and you'll have no problems once we've gone through. So this is the amount of money you need to, let's say you're starting a business. How much money do you need to get that business off the ground? So it could be, say, for example, £25,000, or it could be £20,000. That £20,000 could be used for the purchase of a vehicle, which you're then going to outfit to make burgers at events, and so you'd put £20,000 there. Personal capital available could be 0, or if it's 25,000, it could be you're putting 5,000 there and £20,000 from us. So that's it. That's that section. These two would add up to that. Okay. Now, this number here would be the same as this number here, and all the reason why is because these things here are just these here, but with a bit more detail, essentially. So this section here is the same as this section there. Yeah. And then we just want a bit more detail on the other sources of finance. So it could be that where we've put personal capital available, it could be a loan. So you may put in this section HSBC, £5,000, which would match the £5,000 there. If it was £3,000 from HSBC here, you may have £2,000 coming from other, and you could just put, my father Jim in the name section. So that's that section. Hopefully that's pretty straightforward. Now in this section here, you're essentially just telling us, right, so this is the money I need to start the business, and then here you're just laying out what that money's being used for. So if you were buying a van, the van is a fixed asset, and that would just go there. Okay? Or if it was a computer and a van, they'd both go there. I encourage you to go on Google and just type in what is a fixed asset if you're not sure, and there'll be lots of examples of what fixed assets are. So cars, computers, desks, that kind of thing. Another item in working capital could be advertising and marketing, software, website costs, that kind of thing. So that would go in there. And then your amounts would consequently go here, and add up the fixed costs, they go there. Add up the working capital, that would go there. And then your total capital requirement would match this, because all you've done is broken down what you need for the business, and you've broken it down into where it's going to go, and that's why this box would match this box. Okay, so hopefully that's clear. Now we're moving on to your personal budget. So this is very, very straightforward, and you just list your personal expenses and estimated income. So that would, estimated being obviously depending on, say, the next 12 months after the loan has been taken, income from family and partner that you can rely upon. Other income could be, say, a buy-to-let property that you own, or another job that you've got. If we just step back a minute and think, why do we ask this? The reason we're asking this is because we want to be sure that you can afford, if, say, that business is not making money for the first quarter, for example, because you're putting a lot of what you're earning back into the business. Say you're advertising and you're trying to grow the business. Well, we don't want you to be in financial difficulties because you don't have other income to support yourself and to pay for children's costs or clothes or food and those kinds of things while the business is getting up and running. So it's important to us that the business and yourself are on a good footing, and this is the reason why this section exists. Okay, so hopefully that's clear. And in this section, the key term here is forecast. Okay, so we're talking about the forecast for the 12 months from the date when the loan is going to be given to you, roughly speaking, or another date if you want to use that, but let's say from the date the loan is taken. In fact, I would use that because it ties in with everything else around this section when the loan is provided. So let's work with that. And what do you think the business will produce in terms of sales? So money that's generated from your business. So if, for example, if you're consulting, the consultancy fees, if you're selling food, sales of food, and that kind of thing. So you can work it out on a quarterly basis, so that's 3 months, and then annual total goes there. Any other income, put it there. Total those up, so total of that section goes in there, total up. Okay, hopefully that's clear. And then you've got materials that you're going to use that are going to be, well, you may not have any, so you can just leave it blank, but if you've got materials that are required in your business, and if you're not sure about any of these terms, you can Google them, or I'd strongly advise having an advisor to just help you go through this. And they can explain to you what your materials might be in the context of whatever business you're starting, and other costs, and what the direct labour means, and what that would be as an estimate for that particular quarter, or so on. But particularly if you haven't started your business yet and you're not sure. Okay, so the next section is indirect costs, which is everything else that is not direct costs. So direct costs is things that are costs related to actually let's say if you're manufacturing, so if you're making, I don't know, donuts, so the materials would be sugar, flour, and say, I don't know what else goes into a donut, jam. Okay, so that's your material direct costs. And then indirect would be everything else to make that business work. So you've got power and heat to power the machines, you've got insurance you're going to need, you've got a telephone, you're going to have accountancy advice, you've got some advertising, okay? So that's really how that section is split between direct and indirect. If you're a consultant, then your direct labour would be the people you're employing to provide the advice that other people are paying for. And then indirect would be everything else. Yeah, hope that's clear. And then once you've done that, you can then just put that total in here for those, and then your net profit would simply be C, which is that one, minus D, which is that one. And this figure here comes from A minus B. So this section, take away that section. That box, take away that box. Gives you this box. So hopefully that's pretty straightforward. And then after that, you then may have a sum available. Say, for example, your business is producing a net profit of, that first quarter could be £2,000. You may have a personal drawing of, say, £1,000 or £500 or all of it, whatever it may be. So you'd put that there. And then your cumulative would then be this figure here minus your personal drawings. Okay, let's move on to the next section, cash flow. So where this section is different from the last one is because you're talking about cash flowing, so the movement of cash around the business. So let's just work through it one by one. So let's say, for example, you have, again, a consultancy business and your sales for that first quarter are £10,000. You have personal capital that you put into the business of, I think we, as an example, put 5,000. I mean, it could be zero, often it is zero, but let's go back to, there we go, from this box here. So that's where that comes from. And then you've got the Sir Thomas White loan. So in that first quarter, if you imagine, you got a loan from Sir Thomas White coming in. You may or may not have put some money in as well. Your partner may have put some money in as well, which is this box. You've then got the business producing some sales. You may have other loans, say from HSBC or something like that. If you're VAT registered, then you have some VAT that you've collected. You may have had a VAT back from, you may have had some VAT refunded, given back to you from HSBC. But if you're not that big enough to worry about VAT, don't worry about any of that, because that would just not be applicable. And then you've got the total amount of cash coming into the business in this box. So you're just adding that up. And you're adding that up for the second quarter and putting it there, and so on. Okay? And then you're just talking about, then in this section, you're simply talking about the movement of cash out. So there's VAT you may pay to HMRC as opposed to receiving money from HMRC. And this is money that you paid out in VAT because you bought a computer, which came with VAT, and that's some VAT that's gone out. You've got materials, things that you've bought, going back to this section there, so that will probably match up with that. Other direct costs, again, going back to that section to get them. Rent, council tax, all of these are pretty straightforward. And in this section, you're also putting in fixed assets that you've purchased in that quarter. So you may have bought a computer then, but then you may decide to buy your van. Well, you may buy your van straight away and then buy your computer in quarter 3, for example. And so the cash that you put in for the computer would go into quarter 3. So that's pretty much the cash flow. And again, if you get stuck, talk to one of the advisors, and then you end up with this net cash either going in, which is an inflow, or outflow, and you work it out by doing A minus B. So if your total amount of cash in the first quarter was £30,000, £20,000 from Sir Thomas White, 10,000 in sales, £30,000 went there, and £30,000 went out because it all got spent in various ways. Your net outflow would be 0, 30 minus 30. Cumulative means you add them up as you go along. So if it's 0 there, it'd be 0 there. And if you had, say, 5,000 there, that would also be 5,000, because you do 5,000 there plus 0 here. If you've got 5,000 here now, and then you've got another 5,000 here, you then do 5,000 plus 5,000. So cumulative, you've now got 10,000 cash flow by the time the third quarter rolls around. Yeah, if that's clear. Okay, and then additional information. You can say anything you like in there. You don't have to say anything at all. You could just leave it blank, put not applicable if you want, it's no problem. But if just tell us anything in there you want to say. You may tell us a bit more about why you really want the loan and how it would help your business. I don't know. So as trustees, we're very, very keen to hear anything you've got to say. If you don't have much to say, it's absolutely fine. Don't worry about it, because we'll talk about it over the interview. And as you can tell from me, we're not scary people. It's not like Dragon's Den or anything like that. We're super keen to have a chat and lend you some money to get your business going, because that's what we're all about. And so this process that we've gone through here is just helping you do that. And hopefully this video has made things clear. I hope it has. If it hasn't, by all means let me know and I can try and improve the video. Have a look at these notes as well. They will help you. And yeah, good luck with your application, and I look forward to speaking to you soon.